Hello and welcome. This is a very special day and a very special week as we celebrate 25 years of CNBC-TV18. Joining me now is someone who's been with us through these last 25 years. Christopher Wood absolutely needs no introduction. He was a journalist in an earlier life. He's a strategist. He's a global equity strategist, and he's also, I dare say, a rock star strategist, someone who actually says it as he sees it, and he doesn't mince words. Chris, it's great to have you with us here.
Great to see you, Prashant. I'm honored to be on doing this anniversary for CNBC after 25 years, and I've much enjoyed my interaction with the channel during this period, monitoring India's direction of travel. And it's culminated this year with, I have to say, an amazingly bullish crescendo.
No, absolutely, Chris. You know, and I think this is such a great time to speak with you because a lot of questions here in India about what the U.S. elections and the outcome really means for emerging markets and India specifically. So let me put that to you straight up, and then we can follow up on some of these individual points. What do you make of it, Chris?
Well, personally, I don't think for India per se it makes a huge difference. Obviously, for the world, it makes an enormous difference. But for India, I still think India is on track for 6 to 8% real GDP growth, 10 to 12% nominal GDP growth under the current, in the next 5 years of the forthcoming Trump administration. But in the near term, the election of Donald Trump has created a negative headwind for emerging markets because it's reactivated a strong dollar. I'm not surprised to see that. My base case was that if Donald Trump won the election, most particularly in a convincing fashion, the likely initial market outcome would be a rising U.S. stock market, a rising U.S. dollar, and a sell-off in the Treasury bond market, which is what's happened. So to that extent, it's made it harder it's reduced the room for maneuver for Asian central banks, emerging central banks to cut rates. But the Indian equity story is not predicated on the RBI about to do a lot of rate cuts. So I don't think it's a big negative for India per se.
In the U.S., I mean, the core interplay, Chris, seems to be a stock market and an economy which is picking up pace, if anything, and a central bank which is inclined to keep cutting. I mean, if Mr. Trump has its way, interest rates would be far lower. In any case, I mean, the guidance is that rates will go down quite a bit. I mean, that is a powerful combination for the largest equity market, largest economy in the world. Do you think money will keep going into U.S. assets into 2025 as well?
Well, it's likely that U.S. equities remain well bid going into the inauguration because Trump's administration promises first, the key positive is extension of the corporate tax cuts. The second big positive equity investors are looking at is the expectation there's going to be aggressive deregulation policies. That's why you've seen a big rally in the financial stocks. And there's also hope that energy prices will decline, most particularly as the expectation is that Donald Trump's going to move quickly to try and address this Ukraine issue because he's made pretty clear he doesn't want to keep funding it. So all these are sort of near-term equity positive. In the medium term, though, which I would define as, going into the middle to the second half of 2025, the medium-term issue is what happens to the bond market, because rising bond yields in the US do have the potential, at least, to derail equities at some point. The other issue for the US stock market is not a macro issue, it's a bottom-up issue, but it's very important because the US stock market is dominated by these big US tech stocks. And the risk for these stocks is at some point the market starts to question the amount of money they are spending investing in AI, because that is going to cut back their free cash flow generation.
No, absolutely. And we will have to track these events. So let's just finish the U.S. points, and we'll come to India in just a bit, Chris, in some more detail. So, you said a few things. Let me first ask you, You wrote in one of your earlier reports when the election was still before the elections actually, that Mr. Trump, if elected, will end, some conflicts, maybe at least one of the two big conflicts. Do you still believe that?
Well, if you like Trump or loathe him, I think we have to admit he has a track record of trying to do what he says he's going to do. So basically, he's been pretty clear that he wants to end the Ukraine conflict. So I think we should assume that he will try and do something to address this issue pretty quickly. He's already had a telephone call with the Ukrainian leader. He's been describing the Ukrainian leader as the best salesman in the world. So that suggests he's focusing on the amount of money the US is sending to Ukraine. So I think he will be trying to end this conflict. But in the Middle East, I think the situation is much less clear.
One of the things you have, and we've spoken about this as well, you said, Mr. Trump has said, his policy as far as energy is concerned is drill, baby, drill. Should we expect sustained lower oil prices from where we are? Although I have to say, it's not as if oil prices have shot up despite, some of the highest levels of conflicts over the last couple of years.
Right. So basically, oil's been in this trading range of $70 to $90. And so the base case is we stay in that range. But there is a risk, there is a potential positive for the market, so we go below that range. The one thing about the drill, baby, drill is the question is, geologically, I've heard arguments in recent years that a lot of the shale energy has peaked. So in terms of production, so it's not clear to me the production will rise quite as much as Donald Trump has been highlighting, but clearly there's going to be a very different policy as regards energy. And that's why not only why the energy stocks have got a bid, but it's also why the refining stocks have been hit. But basically, I think the market's most focused, what's really driving this US stock market higher is the expectation of tax cuts extended and very aggressive pro-deregulation policies. But we have to remember Trump's policies, many of them are inflationary in terms of moving tariffs. If he really announces these big tariff increases, that's inflationary. If he really throws out illegal immigration and cuts down on immigration, that's inflationary. Moving production to America is inflationary. So there's a lot of inflationary headwinds, which is why my structural view on Treasury bonds remains bearish. I've been of the view that Treasury bonds have entered a bear market since the Fed printed all that money in the spring of 2020. So base case, I'm expecting Treasury bonds at some point to go through 5% on the 10-year and higher, at which point it will start to hit the stock market. But there's one development, one very dramatic development, which has potential to turn my narrative on its head. Because what's been very interesting, we've had this announcement that Elon Musk is going to enter the administration, and Elon Musk has said he wants to cut $2 trillion of spending from the federal government. I mean, that is an enormous amount. If he actually did cut $2 trillion from federal spending from the federal government, that would actually be very Treasury bond bullish. It would be very US dollar bullish, but it would deliver a deflationary shock to the US economy, which in the first instance would be very stock market negative, although the long-term outcome would be very positive. But the question is Elon Musk really going to be allowed to cut $2 trillion from the federal government? That's taking on a lot of vested interests. But if anybody can do it, it's Elon Musk in a Trump administration with the Republican control of Congress.
In your assessment, what's the probability he actually does it?
Well, no, it's not my base case, but I'm just saying we have to keep an eye on this. Because we know what we know about Elon Musk. Elon Musk will do it if he's allowed to do it. If he's not allowed to do it, he'll walk out. That would be my base case. But I'm sure there's huge savings you can make in the federal government if you really look at the detail.
Absolutely. Chris, you said that Trump is known to do what he said he will do. And one of the things he said is he's going to tariff China in a very large way. But he's got Elon Musk on at his side now, right? I mean, and China is very important for Tesla. And you think, we'll see very high tariffs against China, or this will be different policies, although I think he's campaigned on 60% tariffs, etc., but it's going to be much lower, maybe a little even softer as compared to Trump 1.0.
Well, I have to say I'm a little bit skeptical that Donald Trump's really going to put 60% tariffs on China. If he does, it's going to increase the cost of goods for many Americans. But I believe this is all part of a negotiation tactic. If you listen to what Donald Trump actually says on the tariffs during the presidential campaign, his basic line of argument is that he wants to threaten to raise tariffs to such an extent that overseas companies will be given an overwhelming incentive to move production to the US. So while he will raise tariffs, whether it's 60%, I personally doubt. But I think my view is if I'm in Beijing, if I'm the Chinese leadership, I would have opted to have Donald Trump in the White House, not the Democrats, because under the Democrats, policy would have been status quo. And status quo, as regards US-China relations, is an ongoing deterioration. And the policy which China most dislikes coming out of Washington isn't actually the tariffs, it's this very aggressive policy to seek to deprive China of access to advanced semiconductors. That's what the Chinese really don't like. And so the arrival of Donald Trump does offer an opportunity from a Beijing standpoint to negotiate a new deal with the US. And Donald Trump is intrinsically unpredictable in some respects. He's also intrinsically transactional. So I think from a Beijing standpoint, there's an opportunity to negotiate a new deal. And I think China would willingly trade higher tariffs for greater ability to buy US advanced semiconductors.
So, you know, we earlier had someone who tracks US and global stuff closely saying that the way Trump and Republicans have swept the elections, control of the Congress, control of the presidency, you know, it's unprecedented, and it will have profound implications down the line. I mean, over the years, we can't tell exactly how. But listening to you, Chris, it doesn't look like it's going to be as dramatic. I mean, what is your sense? Direction of travel. Yeah.
No, I'm talking more from an Indian standpoint. I wouldn't change my investment strategy in India one iota because Donald Trump's been elected. But it could have dramatic changes in the US. I fully agree with that, yeah.